So, Oliver, what do you think is going on here with this grain market? It's just kind of chopping around, meandering, if you will, basically with a lower bias. But you would think, from what I can understand around the countryside here, we're probably going to have a little harvest pressure for a while.
Yeah, and I wouldn't really be surprised to think that some of that has already been baked into the cake, and that's something that we talked about going into the USDA report, that we've seen these markets under a lot of pressure, that a lot of people are expecting that harvest pressure and kind of front running the harvest pressure. We did get a bearish to bearish neutral report last week. We had a dip lower on the initial reaction, but saw a springboard higher into the afternoon, which is encouraging, and a little bit of a fundamental rejection, meaning that maybe the sellers have already sold and now it's time for them to cover some of their shorts on this bearish news. But the lack of follow through in the early morning trade here to start the new week is a little bit of a caution flag. We're basically right in the middle of the range from Friday. We're in a 26.5-cent range on Friday, basically right where we were pre-report right now. So the bulls need to see a big push out above 515 to really spark some short covering into the middle of the week and potentially get us back towards 530. I think the market might struggle at that point. This was a very technically significant pocket near 530 where there's a lot of interaction between buyers and sellers. And at that point, I think you might entice some sellers and maybe a little bit more harvest pressure to put a little bit of a headwind in the market.
So, what did the commodity funds do for positioning last week? When you have to consider, of course, I guess the last measurement would have been before that report came out, right? What's the last gauge of their position that we have on the managed money funds?
The managed money funds were big net sellers of corn. They sold about 43,500 contracts. That's futures contracts only, and that's a big amount of pressure right there. 19,000 of that, I think, was new shorts entering the market, and 25,000 of that was long liquidation. So the bulls really want to see this kind of stall out here, enough of the long liquidation from the funds, but they're still long a good sized position, around 200,000 contracts. So we need to see the market defend the psychologically significant $5 handle, break and close below there, and a break below Friday's low could spark some additional long liquidation from that managed money position.
Okay, we'll come back and we'll take a look at our livestock trade in just a moment. And of course, we have to keep in mind there was a packing plant fire last night. We'll see what kind of impact that's having on the market when we come back after this.